All right, welcome. Today, we're jumping headfirst into the world of crypto exchanges. These are the digital marketplaces that are basically the beating heart of the entire crypto world. But let's be honest, picking the right one can feel like a total minefield. So, we're going to break it all down and give you a clear, straightforward guide to finding your way through this space safely. Okay, let's get into it. And yeah, let's just get this out of the way right up front. The stakes here are incredibly high. I mean, as this quote points out, crypto history is full of these massive, catastrophic failures that have literally cost investors billions. Now, I'm not saying this to scare you, but just to really hammer home why understanding how these exchanges work and, more importantly, how to vet them is just absolutely essential. So on a basic level, what even is a crypto exchange? Well, think of it like this. It's a digital marketplace. It's kind of like a stock brokerage, right? But instead of buying and selling shares of Apple or Tesla, you're trading digital assets like Bitcoin or Ethereum. It's that crucial bridge that connects your regular money, like dollars and euros, to the crypto world. Its whole job is just to match buyers with sellers. Simple as that.
Okay, so when you first jump in, you are immediately faced with a big choice. There are really three different paths you can take, three different types of exchanges. And believe me, the path you choose is going to have a huge impact on your experience, your security, and maybe most importantly, how much control you have over your own money.
So the two big ones you'll hear about are centralized exchanges, or a CX, and decentralized exchanges, a DEX. And this table, well, it pretty much lays out the fundamental trade-off. On one hand, you have a centralized exchange like a Coinbase. It's super easy to use, beginner-friendly, and trades are fast. But here's the catch. They hold your funds for you, kind of like a bank. Now, on the other hand, you have a decentralized exchange like Uniswap. Here, you are in complete control. You hold your own keys. That gives you amazing security and privacy, but it comes with a much steeper learning curve because you're responsible for literally everything.
But what if you didn't have to choose? What if you could get the slick, easy experience of a CX with the hardcore security of a DX? Well, that is exactly the promise of this third path that's starting to emerge, the hybrid exchange. It's all about getting the best of both worlds.
So how do they pull that off? It's actually a really clever two-step process. First, for speed, they use a centralized system to match up buy and sell orders super fast. This happens off-chain, away from the main blockchain, just like a normal CEX. But then, and this is the important part, for security, the final trade, the actual swap of assets, happens on-chain using decentralized smart contracts. That means you get that high-speed trading experience, but you never actually give up control of your funds. Pretty cool, right?
Okay, so you know the types, CEX, DEX, hybrid. But how do you actually look at a platform and decide if it's legit and safe? Let's walk through a little checklist, kind of like the one the experts use, to evaluate any exchange out there.
Seriously, before you even look at what coins they offer or what the fees are or anything else, there is only one question you need to ask first. Is it secure? Because at the end of the day, nothing else matters if your funds can just disappear. So let's talk about the absolute non-negotiables for security.
This right here is your security must-have list. Multi-factor authentication, 2FA. That's the absolute bare minimum. It's that critical second layer of defense for your account. Next, you have to demand that the exchange keeps most of its funds in cold storage. That means offline, where hackers can't touch it. Withdrawal whitelisting is also huge. It lets you lock in specific addresses you can send funds to, so a thief can't just drain your account to their own wallet. And look for the signs of a company that cares about security. Do they offer insurance? Do they get regular independent audits? Do they pay hackers to find bugs? These things matter. And just to really drive that cold storage point home, take a look at this. A really solid, reputable exchange should only keep a tiny, tiny fraction of its assets. We're talking like 5% in hot wallets that are connected to the internet. These are for daily trades and withdrawals. The other 95%, the vast majority, needs to be locked down tight in offline cold storage. If an exchange isn't open and transparent about this, that is a huge red flag.
Now, beyond all the techie security stuff, there's another layer of safety that's just as important: regulatory compliance. Look, in today's crypto world, working with an exchange that ignores the rules is just not an option anymore. It's absolutely essential that they're playing by the book.
And the regulatory scene, especially here in the US, is, well, it's a complicated mess. You've got FinCEN, the Financial Crimes Enforcement Network, which makes sure exchanges know their customers to prevent money laundering.
Then you had the CFTC, which calls Bitcoin a commodity, and the SEC, which sees a lot of other tokens as securities. And then, looking ahead, we're expecting new laws by 2025 to create clear rules for stablecoins. The point is, it's a tangled web, and a legitimate exchange has to be able to navigate all of it.
So how do you know if an exchange is actually doing this stuff? Well, you can ask these questions. Do they make everyone verify their identity? Are they actively screening for bad actors? Do they use high-tech tools to check where money is coming from? And, this one's key, have they been independently audited by a third party? A real gold standard platform will have a confident yes for every single one of these.
Okay, time for a really critical reality check. If you've ever invested in stocks, you've probably heard of SIPC insurance. It protects your money if your brokerage goes under. I need to be crystal clear about this. That protection does not exist for crypto. If your exchange goes bankrupt tomorrow, there is no government-mandated program that is going to get your crypto back.
And here's another thing people get wrong all the time. You might see an exchange advertise that it's FDIC insured, but you have to read the fine print. That insurance only covers the US dollar cash balance sitting in your account. It offers zero, nada, no protection for your Bitcoin, your Ethereum, or any other digital currency you own. The takeaway here is that in crypto, you are relying on the exchange's own security and your own good judgment.
So we've covered security, we've covered regulations. Now let's look ahead a little bit. The whole exchange landscape is changing at lightning speed thanks to new tech and more new rules. So where's this whole thing going?
This chart tells a really fascinating story about the future. The projections show that as we get clear rules for stablecoins, those tokens pegged to the US dollar, their use is just going to explode. By late 2025, they could make up more than 93% of all transactions happening on public blockchains. Meanwhile, Bitcoin's role shifts more towards being like digital gold, a store of value. What this means is that the exchanges of the future have to get really good at handling these digital dollars.
And this quote from David Krauss just nails it. It perfectly captures this massive shift we're seeing. For years, everyone argued about which blockchain had the best technology. But now, in this new era, the winners are going to be decided by something else. Which digital assets can actually work within the existing financial and regulatory systems? It's not just about writing good code anymore. It's about being able to comply with the rules.
And all of this brings us to one final big question. This whole discussion has really been about one central conflict. As the crypto world grows up and gets more integrated into the global economy, what's going to win out? Is it going to be the easy regulated convenience that centralized companies offer? Or will that original crypto spirit, the idea of self-ownership and decentralized freedom, be what ultimately wins the day? That is the question that's going to define the next chapter for all of us. Thanks for watching.